guys, welcome back to the YouTube channel, the best place for you to learn and share about budgeting, saving, investing, and all things financial literacy. My name is Gertrude. In today's video, we're going to go through a guide to investing in shares in Kenya. Well, what are we going to look at? We are going to look at 1. What a share or a stock is. 2. How you can invest in shares in Kenya. And 3. How much it costs for you to invest in shares in Kenya. Well, let's get right into the video. 1. What is a share? Well, a share is a unit of ownership in a company or business. What this means is that after you purchase the shares of a particular company, you become a shareholder, that is, part owner of that company, you along with other shareholders. Now, in Kenya, the minimum number of shares you can buy at a go is 100 shares. This means that if one share of a company is 5 shillings, you need at least 500 bob to buy that company's share. Well, let's go to the second part of this video, how you can buy shares of a particular company. Well, the first step in acquiring shares of a company is to first know the purpose for which you are buying the shares. This can be either 1. Capital appreciation, or 2. Dividends. The first one, capital appreciation, is whereby you buy shares of a particular company at a low price only for you to sell the shares later on in a later date. For example, you can buy shares of a particular company at 30 bob and wait for them to increase in value. Let's say you sell them at 45 bob. That will be capital appreciation. The second one is for dividends. That means you'll buy the shares and hold them. I'll give a demonstration of how you can calculate the two means, capital appreciation and dividends. On to the second step on how you can acquire shares in Kenya. The second step in acquiring or buying shares in Kenya is whereby you'll need to get a broker. This is someone who will be purchasing or selling the shares on your behalf. This person will also help you open a trading account. Now, for you to get a list of certified brokers in Kenya, you'll need to go to the NSC website, official website. I'll leave a link in the description box below for you to check out a list of certified brokers in Kenya. Now, I've mentioned the word trading account. For you to open one in Kenya, I think the cost is around 1,200, and for you to to keep it active, you'll need 100 bob per month. Now, onto that step on how you can buy shares in Kenya. The third step is for you to open a CDS account. Now, a CDS account is a Central Depository and Systems account. This is whereby all your securities will be stored electronically. Now, before the CDS account was introduced, people used to receive certificates upon buying shares. That certificate was the proof that you own some shares in a certain company. On to the fourth step, sorry. For you to open a CDS account, you need to go to your stockbroker, whereby you'll file an account opening form, of which you can either choose to go to your stockbroker or go directly to CBK. There are some requirements that you'll need for you to open a CDS account. These include 1. 2 passport size photos, 2 a KRA pin, 3 a copy of your original ID, or passport. For some stockbrokers, you'll need to present other documents such as utility bills, tax returns, and so on. This depends on your what your stockbroker needs. One last thing that you'll need to know is that when opening a CDS account, it is free. Yes, I've said it. It is free, but I've recently learned that for you to maintain the CDS account, you'll need to make monthly payments of 100 bob. That is 1,200 per annum. This week's shout out goes out to none other than Elvis. Thank you, Elvis, for this thoughtful comment to be featured in our next video's shout out. Step 1, take a screenshot of this video. 2, tag me on Instagram, or leave a thoughtful comment in the comment section below. Back to the video. The fourth and final step on how you can invest in shares in Kenya is to choose the company or companies that you will be investing in. Now, the first thing that you'll have to do is to choose a company that you understand. This will help you keep track of your investments. There's no need of investing in something that you've had other people saying is good, yet you don't understand what goes on in that company, such that if the company is not doing well, you wouldn't know. So the first rule is for you to choose a company that you understand. The second thing that you have to do when choosing a company to invest in is to do a background check and check the financial health of that said company. Some of the things that you need to look at when you look at the financial health of a potential company that you want to buy shares of include: 1, does the company give out dividends to its shareholders? Another thing that you have to look at is the debt to income ratio. That is, does the company have more debt than the income it is making? Another thing that you have to look at when choosing companies to buy shares of is the stock price. Now, something to keep in mind is that low price does not always mean affordability. Now, rather, it can mean that the business is slowing down, and vice versa. What do I mean by this? I mean that high price could mean that the company has potential to increase revenue in the near future. Now, as we come to the end of this video, I'd like to mention that when it comes to your stockbroker's fees, try and ensure that the fees is below 2%. Now, let's get into the demonstration part of this video, whereby I'll be showing you how much it will cost you to acquire shares in Kenya, to buy shares in Kenya, as well as the difference between capital appreciation and dividend payout, which, yes. Welcome to the demonstration part of the video. We're going to calculate how much it costs to buy shares in Kenya. The first thing that we have to do is open a CDS account and trading account. Second thing is to calculate the minimum amount, which is the minimum number of shares is 100, as we said. The current price of the stock that we are using is 31.80. The total value of the minimum number of shares is 3180 times 100, which is 3,180. Then we calculate the broker's commission and other charges, which amount to 2% of the total value of the minimum shares. The total amount is the 3180 plus 63.6. Now we come to the second part of the calculations, purpose of buying shares, which is capital gains versus dividend payout. As a rule of thumb, we buy low and sell high. The buying price is 31.80, number of shares 100, total value is 3180, broker's commission 2%, as we did in the previous example. Total cost of investment is 3243.6. The selling price as well, is 45.20. The total price is 45.25. The broker's commission and fees is 2% of the 45.25, which is 90.5. The net return is 45.25 minus 90.5. The gain is 44.34.5 minus the buying price. Now we go to the dividend payout. The dividend price is 1.37 per share times the 100 shares that we had, which is the 137 shillings. Total return is the 90. Yes, the total return is the gain plus the dividend payout, now which we'll use to calculate the return on investment, which is the total return over the buying price times 100, which we get 40.94%. That's it for this week's video. Do leave any questions that you have in the comment section below, and I'll see you in the next video. Bye.